did. Hey, everybody, welcome back.
We are live on the tube.
Everybody start coming in. It's time to start.
Live on the YouTube.
Everybody get to class. You're going to be late.
Everybody gets a class? We're going to go to class?
You're going to be late.
That's kind of cool.
Taking you to school. Taking you to that real estate school. If you guys watch all our videos, you guys would be loan officers.
Yeah, I know, right?
I mean, seriously.
Have
You'll
you
know
been
more
through?
than...
Have you been through some of the videos?
Oh, yeah, man.
I've went through. I'm actually pretty proud of the body of work that we built.
If I had this catalog of videos when I started...
Oh, dude.
Woo!
Yeah. Plus the little catches, because there's a lot of things that I'm putting out, we are putting out, that even experienced loan officers don't know because they only lived on one side. They're either been broker or they've been direct lender or they haven't figured out where the money is in the business because there's a lot of money in this business.
So, there's a new show on Netflix. I want to know if any of you guys have seen it. I loved it. I watched the whole thing. It's called Griselda. It's one of those gangster drug movies, Pablo Escobar type things. I love that stuff. I watched it. I finished it, and it was fantastic. I want to know if any of you guys seen it.
Gangster drug?
Gangster, storybook prankster.
Wow, okay.
Yeah. So
where you got?
what's up, guys? Where you guys at? I mean, city, state. Is it raining or snowing where you're at? It's pouring outside right now.
Bring up the rates. Bring up the rates, man. What are you waiting for?
Here in SoCal, it rains about, 3 days a year.
And
it's
when
one
it
of those
does,
days.
everybody loses their mind.
How do they drive?
They lose their mind. They're crazy. It's like we're in the middle of a blizzard.
Silly Californians.
So, got some good news. Good news. Kind of. Not all the way good news.
It's good news if I like it.
Kind of.
I mean, if I see it.
Kind of. Yeah, that's actually pretty good. That's the best we've seen in...
Great news.
I haven't seen...
What's up, Shelly?
We're about to drop some rates on you that we haven't seen in 2 years, probably?
Oh, it's been a while.
About 2 years. I would say 2 years.
2021?
Yeah. So, here's what happened. Yesterday was the first FOMC meeting of the year. Okay, so January 31st, first FOMC. Okay? And that's where Jerome Powell comes out, and he's the head of the committee, chairman of the Federal Reserve. Go ahead.
Celso, just say what's up.
What's up, Celso? So, Jerome Powell came out and he said, all right, he did everything we expected to like clockwork. Like he was being a paid actor. He was there going, hey, things are good. Yeah, unemployment is getting right where we need it. Hey, things are good. We are not going to cut rates. We are not going to increase rates. And everything was great till the end. And then he said, based on the economic factors, we do not see a interest rate reduction at the March meeting. And then he went to substantiate. He said, if we do it too early, then all of a sudden that we won't maintain control of the economy. If we do it too late, we will harm the economy. So, at the moment, we don't see a interest rate reduction at the March meeting. And then the stock market tanked. Because all the experts are thinking, hey, this is going to happen in the March meeting. Now, if you've been listening to us, we don't think that everything rights the ship until the beginning of third quarter. We're kind of at the middle of first quarter. But the beginning of third quarter is when things are going to start screaming, which is either very good or very bad, depending on which side you rest on. But when he said we are going to maintain the pause, we all knew that. Everybody knew that. 98% chance in Vegas, we're maintaining the pause. Then he said we don't expect, or I don't know the exact words, but he said we basically don't think there's going to be an interest rate reduction in March. The Fed will remain fluid on this. And then the stock market said, holy shit. Can I say that?
I think so.
Okay. It said, holy shit, we're not going to see an interest rate reduction. And everybody freaked out. Now, remember that there's two different things. One is the economy. The other one is mortgage rates. Mortgage rates are based off of the 10-year yield. 10-year yield. So, did that affect mortgage rates? Yes. Did it go up? No, they went down. Now, here's why. Because the 10-year yield, traditionally, for the last, if you go back like 80 years, the spread between the 10-year mortgage yield and the mortgage interest rates about a point to a point and a half. We call them basis points. So 100 basis points, 150 basis points, okay? But because of the uncertainty, we've been writing at about 250 basis points because we don't know what's going to happen. When the Fed said at the last meeting in 23, they said, well, we believe we've reached the peak of the economic cycle. Once they said they've reached the peak of the economic cycle, interest rates said, hey, we don't need that giant spread anymore because we're pretty much at the top. And interest rates dropped. And everybody said, hey, interest rates are dropping. Oh my God, what's going on? Like if it's a mystery. It's not a mystery.
We'll get to you, V. We're going to answer your questions.
Hang tight. So, the spread between the 10-year yield and the mortgage interest rates is customarily 100 to 150 basis points. And the banks are starting to compete. And because they're starting to compete, you're going to love this. Everybody who's listening, you are going to love this. New American is putting out right now that if you wanted a 30-year fixed FHA,
Okay, side eye.
5.375. 5.375. We haven't seen that since 2021, right? 2021?
The end of 21, yeah.
We haven't seen it since 2021. We're in 2024. 5.375. 5.375. Wait, what? Yes. If you don't believe me, go to the link at the top of our profile. You'll see cool stuff. Go to cool stuff and you'll see the New American funding rates that I'm looking at right now. 5.375. Can it get lower? Sure. If you do a 15-year, they are currently quoting 5.25. Craziness. Now, is there going to be a dramatic reduction in interest rates in the next month or two? Probably not. And the reason is that the Fed is going to speak again in March. March could get crazy, but we got all of February and a lot of March before they speak again. So, this is kind of good news because it means that the economy is stabilizing, and if you want to buy a home, you're in a sweet spot right now where rates aren't too high to be prohibitive, but they're not so low that you're all competing.
Yep.
And if you're listening to us and watching us, I'll justify everything I say. Everything. If somebody, I talked with somebody yesterday, great person, and said, hey, I don't want to buy it for about 9 months. And I said, listen, one of the things I've learned a long time ago is I can't rush anybody into buying a house. So if you're saying 9 months for your own reason, fine, 9 months. Let's do it. We'll wait. I'll wait. I'm going to pull your, as soon as I can, I'm going to pull your credit whenever you give me the thumbs up, and I'm going to tell you what your situation looks right now. But if you don't want to buy for 9 months, listen, we got deals coming in all the time. We got people calling us all the time, filling out applications all the time. We want to help people, but we only want to help you when it's time. If it's not time, we'll teach you. And this is really good to learn. And if you're a loan officer out there, dude, follow us. I follow a lot of loan officers because I try and tighten up my guideline understanding and to find out if somebody's right, find out what their marketing mechanisms are. We're not against loan officers. We love the loan officers. We love the loan officers. We love even the haters who come in and fight at us. Anyway, go ahead.
Yeah, so all that being said, if you want to wait. For those of you that are serious about buying right now, text us. What, Lee? What do they need to text us?
If you are a badass, if you need a badass loan, you need a badass loan officer. Call the badass loan officers at New American Funding. Your badass loan officers at New American Funding are Chris and Lee. You can reach them by screenshotting this right here, and you can get a badass loan officer on your file. This will disappear in 5, 4, 3, 2, 1, bye.
So if you're real serious, text us whatever platform you're on, Instagram, TikTok, Facebook, YouTube, wherever you're at, text us that, and then we'll get you an application and we'll start your process now. You don't have to buy now, but you will know exactly where you stand, and then you can buy in the future. So to questions, let's go to V. It's hard for a single parent making under $40,000 a year to qualify for a home.
Is it hard? Not it's hard.
Oh.
Is it hard?
Is it hard?
Is it hard? It depends on what you think qualifying for, because if you live in certain parts of the country, that's a good income. If you live in certain parts of the country, that's not going to be enough. So if you live in Arkansas, you might be able to do something. If you live in California, Los Angeles, probably going to be a little harder. So $40,000 a year with no debt, you're probably starting around $200,000 a year, somewhere in that range at the interest rates that are at today. $200,000, somewhere in that range. Now, if that's not enough, you need either more income non-occupant co-borrower, or an occupant co-borrower, and that's it, right?
Yeah.
Yeah, cool.
So Habib Mia, rates are expected to drop.
Habib, you think so? Tell me why. I'm telling you, Habib, we're quoting it right now, and we're quoting. Remember, when I give a quote, this is not your quote. I can only give you your quote after I pull your credit, calculate your income, and assess your assets. Once I do that, I can give you your quote. But New American Funding is putting out 5.25 for a 15-year fixed and 5.375 for a 30-year FHA fixed. Don't believe me? Go to our profile, go to the link, go to cool stuff. You'll see the loan. You'll see the rates.
Javo or Lavo, cloudy in Merced, California.
What's up? It is.
It's rainy
crazy.
in SoCal.
It's
Real
crazy,
rainy
yeah.
in SoCal. Habib said, what's the average HELOC rate right now?
HELOC is across the board because people go for HELOCs because they don't want to get out of their primary. So we priced one at 9. I think it was last week, right? We priced the HELOC
like
at
that,
9.
yeah.
Yeah. I think we priced the HELOC at 9. You're not going to get the same great rates as you would with a primary residence conventional conforming. That's probably the lowest interest rate you'll get on all the loans.
HELOC is home equity line of credit for those of you who don't know. And the reason why you would get a HELOC right now is if you have a really low rate and you want to take some of that money out of your house, but you want to do home repairs, buy a new car, pay off some debt, whatever it may be. And then down the road, you're probably going to want to refinance back into the house so you can have a combined low payment. So there's a strategy for that, guys. If you don't already have a plan, we'll give you one.
We appreciate you on Facebook, Instagram, TikTok, and YouTube. Thank you very much. Heart it up, throw us some balloons, put a mustache on this guy. Let the algorithm know that we're trying to get you to buy a house in 2024.
Matt Gleason, I own 2 rentals that are fully paid. Should I use some of the equity to buy more?
Well, Matt, that's a good question. That's a very good question. So, is your strategy to own more? If your strategy is to own more, then the only way that you can own more is to buy more. If your strategy is to sit tight and pay it off, which I meet a lot of people on both sides of it. Some people like to leverage themselves to the hill. Some people like, I can't wait to pay off my mortgage. Those are both strategies. And neither one's necessarily right or wrong. It depends on, does it complement your lifestyle? Some people are just entering the prime earning years of their life, and they're making $250,000, $500,000 a year, and they're just acquiring. Some are retiring and going, hey, listen, I'm not going to be earning money anymore. I just want to pay this stuff off. So it's going to depend on you. We can talk with you. And if it's just numbers, the numbers are pretty straightforward. You can see them pretty clearly.
Matt,
Cool. What do you got?
Jesse Rodriguez, I make $109,000. How much can I afford? No debt. Good job, Jesse.
Jesse. At today's interest rates, I'd say you start at about 450, 460, somewhere in that range, and we go up from there.
Yep.
We go up from there.
City and state, guys. I want to know where you guys are located.
Cool. Where are you at?
Call Lee Free.
Call Lee Free. I don't know
I think
what
that's a
that means.
commercial for us.
Yeah.
So thank you. I
All right,
appreciate
cool.
that.
Yeah. Am I free?
Erica, do you work in Arizona State?
Yes, we do. Arizona State is
University?
a college. Yeah, Arizona State is a
I'm
college.
not a professor.
Yeah. Erica, we're just funning with you. Yes, 49 states, 49, every state except New York. We actually have one of our top producers who comes to our studio often. Her name is Karen Dazala. She jumps up on here once in a while. But she's in Arizona, and she spends half her time in Arizona, half her time in California. So, yes, we work Arizona.
I got a quiz for you guys.
Cool.
How many states in the United States? How many states in the United States?
You're kidding.
No, it's a
All
real
right.
question.
Okay, cool.
It's a real question.
All right, whatever.
Okay, so V.
I live in Texas. I love it. You know what? V, you might be your own country one day. My primary residence is Texas, too. I have a Texas driver's license. I might be in a different country one day. It's hilarious to watch. Our governor has got some guts. He's doing some very, very big stuff. And then strangely, there's a whole bunch of other governors that are backing him with military. Not like, hey, we support you from back. No. They're sending their National Guard. Holy smokes. It's crazy. What do you think what's going on, B?
Habib Mia. No, it's not. As long as you have decent credit and DTI, it's good.
I don't know what that means.
Me either.
All right, cool.
Thanks, Habib.
All right, good.
Erica, do you say FHA rates are 5.375 for 30 years?
Yes, we just did.
Did we really say that?
Yes, we did. And
Holy cow, we did.
5.375. Now, Erica, if you're a loan officer, you're probably sitting back there going, I don't know if that's true. I price loans. That could be bullshit. Yeah. Here's what I want you to do, Erica, if you're a loan officer. I want you to go to our profile, go to the top, go to the links. When you go to the links, you're going to see other cool stuff. Go to cool stuff, and you will see the rates that New American Funding is putting out. Now, like any country or like any business in the world, when they advertise, they show their best. And their best is an 800 FICO, 20% down, probably 40% down, 24% DTI. It's the perfect file. So, do we give everybody 5.375? Anybody who qualifies, we give them 5.375.
Habib said, damn, that's high. But so is Snoop Dogg, and everybody loves him.
That was a pretty good comeback. I got to think
not
about
really
that.
a
I got to think
comeback.
about that.
Just
Who's
a
better,
fact.
Snoop Dogg
Just
or
a
Ben
fact.
Shapiro? Who's a better rapper?
Moving on,
Ben-
Brian wins.
Ben Shapiro's a badass rapper, man. I know, yeah.
It's good and it's funny.
It's very good.
What's hard
It's
is
very good.
getting a mortgage under 50K. There's a lot of houses in my area that's 40 to 70K. Where do you live, Brian Wynn?
Brian, you're right, Brian. Let me tell you why.
I'm gonna
Let me
go
tell you why.
there.
There's something called an HPM. That's a high price mortgage. Now, when Dodd-Frank came out, which is the big law we all live by, when Dodd-Frank came out, they said, hey, we're not going to allow lenders or banks to charge exorbitant fees. So it cannot break this tolerance. Once it breaks this tolerance, it breaks into HPM. Well, there's certain costs with the mortgage that you can't get around them. And at probably about 80,000, the costs start to break into HPM. So most banks just steer away from those lower loans. I tell people that people are like, hey, I have $120,000. I want to put $60,000. I'm like, can't do it. But if you put down 3.5%, that's great. And then once you 30 days, 60 days in, write a check for the remainder, and I'm going to teach you how to pay that off in probably 12 years. I'm going to teach you how to pay it off in probably 12 years. And they're like really happy about that. Cool.
See, you thought I was lying. Habib said 51. Easy said 48. Jesse said 50. I'm telling you, man, this is a good question.
All right.
Easy. 8K. 8K for what? What's that mean?
8K. 8Ks. I don't know. 8Ks are forms that you fill if you're a stock owner. You can fill out the 8Ks.
I'm trying to invest in property, but completely lost.
Easy. Okay, we'll give you a hack. Here's a hack, easy. It's easy. So, if you're trying to be an investor and you're brand new at it, you got to do a lot of education. You got to learn a lot. Because it's cute when you hop out of high school and you're like, I'm going to be an investor. But the guys who've been around forever and ever, they know you probably don't know anything. So you have to learn, okay? So here's what you do. This is a hack. If you're trying to get a whole four unit where you have rental properties, usually you're going to need 20% down, sometimes even more, but 20% down. When you're brand new, you probably don't have that. But if you went and found a four unit, and you said, I'm going to live in and make my primary residence the big unit, and I'm going to rent the other 3 units, you have now gotten into a mortgage with 3.5% down and a very low interest rate, prevailing interest rates, FHA is probably the lower, and you now have 3 renters. You have hacked the system. Now, you must live in it for 1 year. You have to qualify. But this can happen. So, good news for you. There are hacks out there, and we can make it happen.
Yes, sir, there is. Matt Gleason, what's up, man? How you doing?
What's up, Matt?
Habib Mia again. Is it smart to use my primary equity to buy a rental property?
Habib, it's going to boil down to numbers. Does that rental property debt service? Is it a good time to buy it? Do you have a screaming deal? I've seen people who buy a screaming deal at a very high interest rate. They got a really good situation. I've seen people buy a money pit with low interest rates, and they got a bad deal. Everything is based off of the numbers, and there is some experience involved in that.
Yep. You're welcome, Jesse.
Cool.
Jesse out of California.
What's up, California?
Brian Wynn out of Northeast Ohio.
Ohio. We love you in Ohio.
Yeah. Jesse Rodriguez says, I'm 24. Should I wait to buy and let my salary go up?
Jesse, you have to find out what you qualify for. We don't know what your salary is right now. We don't know where you live. Sometimes I put a military guy into a home about 6 months ago, and he was an E4. E4 makes maybe 30 grand a year, 28, 30 grand a year, but they get what's called BAH, Basic Allowance for Housing. So I'm able to use the BAH because he has more than 2 years on the contract. Is it 2 years or
I
3?
think so, yeah.
Because he has more than 2 years left on the contract, I'm able to use the BAH, which means the military basically pays his mortgage. Now, we did this a little while back, and he's already got equity in the house. So, depending on your situation, if you're military, it's a little bit different. If you're married, a little bit different. We got to figure out how much you make, how much you can put down, and make it all work for you. Are you selling Altoids?
This brought to you by Altoids.
All right, whatever.
Autumn Love, how
Whatever,
you doing?
Whatever.
What's the ideal credit score to buy a home?
Ideal? Ideal's a good question, man. Ideal. The ideal credit score to buy a home is probably 820, because above 820 don't matter, but 820 is ideal. Now, how much can you get away with, which is what most people are really asking. FHA 580, conventional conforming, which is Freddie Mac and Fannie Mae, 620. And then USDA, pop quiz,
580.
580. VA, doesn't matter. The VA guidelines don't require a minimum FICO score. They do have a special calculation called the residual.
Is that Alliance, Ohio is full of them. You can't get financing because of the size of the mortgage. Very difficult. That's what Lee was talking about earlier.
Yeah.
You're welcome, Habib. Jesse, 109,000 in California.
109K.
What's this homeboy gonna get? Also, more data. He has 30K down and a 700 credit score at 24.
Dude.
Good job, man.
Good for you. Good for you.
Heck yeah.
So, I would say, what did you say, 100K?
109.
109?
Ballin'.
I'd say you start at 460, 470, and
Right.
then you go up from there.
This is a 24-year-old man.
Go.
Put him on the right path, because as us being young men at one time, we wanted and got a lot of things, and it could really interrupt your ability to buy a house, like buying a Raptor.
Yeah, don't buy a Raptor. Yeah, I know it sounds so stupid, and I tell young men all the time, I'm like, hey, you start to make a lot of money. Don't go buy a brand new Corvette. Don't buy a Raptor. Yes, it looks cool, and you're going to screw up the next 10 years and you don't even know it. Sorry.
Ryan, I like buying 10K, under 10K for foreclosures.
That's a great deal,
I think
man.
everybody
If you got that, that's a heck of
everybody,
a deal,
Northeast
man.
Ohio, that's where the deals
Yeah,
are at.
I guess that's where the Section 8 situations are.
Maybe, yeah. Habib, 580. Yeah, you can get away with that.
You can get away with 580 on an FHA and USDA. He's answering your USDA question.
What was the USDA
He's
question?
he's a loan officer. Habib, great to see you, man. We appreciate you. If you're an LO, don't be shy. Tell us you're an LO. We don't have a problem with it. Cool.
Erica, what's the rates for USDA? We'll have to get that.
Yeah, it's
not in front of us right now.
It's not in front of us. USDA is a whole unique animal because it's geographically driven. You can't just say, hey, I'm going to get me a USDA loan. The property, the actual address has to be registered with USDA, and USDA has to say, thumbs up, we will finance that. Very unique product, only in rural areas.
Autumn Love says, wow, but it's so much more than the score. It's debt to income and all.
You are correct, Autumn Love.
What can you get with a 700 credit score, $98,000 per year salary, and no debt?
You're probably starting at 450, 460, somewhere in that range. It's going to depend on tax base, and it's also going to depend on homeowners insurance. What happened in California recently is crazy. Tell them.
Stupid.
Tell them.
Stupid. Okay, so a lot of the carriers left California. Like, straight up just said, we're not going to do business there anymore, okay?
What?
I wonder why. California's so a great state politically, right? Anyway, that being said, a lot of carriers aren't doing business here. I'll give you my personal situation. So my auto insurance, I know you're talking about homeowners, but my auto insurance said, you got to pay this much to renew. And I'm like, this is an amount that I've never paid before. They said, sorry, there's only 2 carriers right now, and if you want insurance, this is the one you're going to have to go with. Kind of strong-armed me on my insurance.
Oh, wow.
It's happening for homeowners, too. And I'm actually doing a file in Texas that I just did before we got in here. The premium's through the roof. So you guys want to be aware of that, because your premium going up in price brings up your mortgage payment. So just be aware.
And that brings down your buying power.
Yeah. So Jesse, yes, I want to buy a car, but my parents told me to focus on a house. You got good parents, man.
Yeah,
You got good parents.
listen to mom and dad. They're telling you the right stuff.
And the rest of you, listen to Jesse. Yeah. Listen to Jesse, okay? Because here you can get the advice of what you need to do to become a homeowner. I was just telling Lee earlier that I wish I had us when I was a kid because I would have been a homeowner sooner. I'd have more. I'd be building. I'd be richer. All the things. Because if you start young, you got a lot of time to build, guys.
Yep. Time's your most valuable asset by far.
Yep. Brian Wynn, you can get all your money back in 4 years. Doing what?
Yeah, I don't know what you're talking about.
What's
All your
that
money
referred
back in 4 years. Maybe he was talking about the military situation because the military guy jumping in. We don't know what you're talking about, Brian Wynn. Bring it back up.
He might be the one that's buying all the properties in Ohio. He's the one buying all the properties in Ohio.
He's buying in Ohio. Yeah. 10K, that's crazy, man. There's this guy who's making the rounds right now, and he's pretty famous. He's an amazing marketer. Amazing marketer. And his name is Tom Cruise, not the actor, Tom Cruise. And he's pushing this Section 8 situation. So we've had a lot of people call us and say, hey, this Section 8 situation, is it good? And before I shoot at something, I actually dig in and vet it and do a lot of. So we looked into it and we're like, okay, Section 8, I actually deal with VASH. I've rented to VASH, which is the Section 8 for veterans. But Section 8 is a guaranteed monthly payment. And I'm sitting there going, you know what? This isn't a bad strategy. It's an okay strategy. It's okay. And then I looked into it and I was like, okay, this guy does have a lot of properties. Okay. And then I went to one of his lives and he does this auction, multi-level marketing way of getting you to buy. And he sells $5,000 course. 5,000 or 10,000?
It's 5.
It's 5,000?
Yeah.
So he sells $5,000 courses. And I was on there going, oh, this guy's making a fortune selling courses. He's making a fortune selling courses. I'm not against it. I'm not. That would be like Chris and I going, hey, you could be a loan officer. Well, for only $5,000, we'll teach you. And not wrong because we're loan officers. Yeah, I would. Yeah. We're not wrong because we're loan officers. We teach you how to do it and everything. But when the income from the sale of the course supersedes the income of the loan officer and you put more of your effort into the selling the course, you are now not necessarily primarily a loan officer. You're now a course salesman. Now, he sells this with the Section 8, and I'm like, okay, he's not lying, but he is leaving a lot out. And he's not leaving a lot out intentionally. He's leaving a lot out strategically, but not really lying. If you call him on it, he'll tell you. And he's just hardcore with it. It's like when I was a stockbroker, and somebody said, hey, can I lose all my money? And I would say, yes, you can. Absolutely, 100%. Yes, you can. If that's unacceptable, you need to not invest anymore. And they would be like, wow, Lee, I didn't expect that. And I'd say, yeah, cool. Now, that's the downside. Let me tell you the upside. Here's the upside. Now, did I lie to them? No. If they bought a bad stock, I've bought thousands of bad stocks in my life. Bad stocks, which I thought were great. AMC, which I thought they were great. And didn't turn out. So there are people that buying these houses, and the only way they work, they pencil. Because I tell everybody, it has to pencil. Pencil meaning how much did it cost you? How much is the mortgage? How much can you rent it for? We have to keep in a management company. We have to allow for the X factors. If everything in there allows for the X factor, then it pencils. In California, you probably won't find any of these that pencil. But there are some places that you're talking about in Ohio that pencil. There's some places where the house costs are way low and the Section 8 allotment is okay. So it pencils. And in that situation, it works. But you better know what you're doing.
Heck yeah. Cool. Jesse Rodriguez, I will for sure email you guys. Having trouble with my loan officer because of my 2-year work history. Yeah, give us a buzz, man. Give us a call.
We're really good at this stuff, man. We're really good at this. If you need a badass loan, call a badass loan officer. Your badass loan officers are New American Funding or Chris and Lee. You can reach them by texting this phone number and saying what platform you saw us on. If you saw us on TikTok, click TikTok or text TikTok.
Okay.
Instagram, Facebook, YouTube, whatever. We're here for you. We're going to make it work. Ryan, I need $1 million loan. Ryan, we're here to help you with that $1 million loan.
Dude, why not 10 million?
Dude, all you need is maybe $220,000 a year in W-2 income and $1 million loan. No debt, no liabilities, 800 FICO score, ready to go. Shoot, in LA, I'll even get you 5% down. Probably 5% down.
Sound like Rick Ross.
Yeah, Rick Ross.
Autumn Love. If you want a mortgage around $1,400 per month with about $10,000 down, what prices should you be looking at? I know that off the top of my head.
What was it? How much a month?
$1,400.
$1,400 a month. That's probably $1.90, $1.80, $1.90, somewhere in that range. But it's going to depend on property tax base. If you went to a new build, oh my God, I got some stories for you on new builds. Oh my God.
Ruh-roh.
Oh my God. There's some new builds that are dirty, man. They're dirty birdie. And they make it sound like they're like your classic slippery, slimy used car salesman. And they're like, hey, you better use our realtor and our lender, and ours will beat everybody. Everybody. I say everybody, everybody. Don't worry about it. And they try and sweet talk you. If you stick with us, which we have, most of our clients stick with us all the way through, even through the new builds. And once you get to the end, I've seen this happen at the end. They're like, well, forget all the smooth talking. It's just numbers. It's just numbers. It's just numbers. And I'm like, yeah, no, it's not. There's more to it than this. There's a lot more to it. And you're pulling the wool over these people's eyes. And they'll say, okay, what's the one thing? I had this yesterday. We're closing on a new build. And the client said, hey, what's the one thing that you can do that the new build won't? And I'm like, okay, I'm about to teach them about the mortgage business, but this is a small, short time thing that's happening right now. New American Funding will refinance your loan for the next 5 years. No cost, no bank cost. They won't charge you the bank fee. It's done. They won't charge it to you for the next 5 years. Do you know why the builder can't? Because once they fund your loan, there's money selling the loan to the secondary market. They're going to sell your loan. And once they sell your loan, they get another anywhere from 1% to 3% of the loan. So
what does that mean, sell your loan?
That means there's the loan and then there's servicing rights. So the investor makes an allotment for servicer. Servicer makes a piece of the payment every month. So the servicer, that's called servicing rights. Mm-hmm. And there's money in the loan. There's money on the front of the loan. There's money long term in the loan. It has a value once it hits the market. So some banks say, hey, listen, I'm going to keep that loan. Very few do, but some do. We do. And they say, I'm going to keep that loan and I'm going to take the servicing rights. And let's just say you make $300 a month every month from that loan. Well, once you get 100,000 loans, it starts to add up. And that's New American Funding's strategy. They keep most of their paper, most of it. Well, if you're a broker, you cannot, by definition, you're brokering the loan. So you're going to get sold, and you're going to get sold to Mr. Cooper or some other servicing company out there. And when they sell your loan, they make anywhere from 1% all the way up to 600 basis points in certain situations. So if it's a $500,000 loan, they make $5,000 for selling it, or up to $30,000 for selling it, depending on the situation. While the builder is counting on that, we'll meet in the middle, 15,000. They're counting on that 15,000 selling the loan in the secondary market. And forever, you are going to be chasing your servicer because they're going to change all the time because they sell the package, sell it. So what's the benefit we can give you? Well, right now, if you funded a loan with New American Funding today, won't last forever, but today, New American Funding will refinance your loan, no bank costs. None.
Sweet. Brian Wynn, I took out an FHA for my daughter years ago. She couldn't get financed. I lived there for a year and never spent a night in the house. That's a little scary. Here's why I say it's a little scary. FHA is a primary residence loan, okay? Everyone's trying to beat the system. Mm-hmm. Everyone's trying to get the lowest down payment to buy a house. I'm not saying he did anything wrong, Brian, but here's what I am saying is a person will say, hey, I'm going to live in the house, so it's going to be my primary residence, and they don't. And then someone knocks on your door and says, hey, is Brian here? And if you're not, they're like, no, Brian doesn't even live here. They're like, who's Brian?
Well, hold on. I'm rereading it because I said the same thing. Let me give you guys a little hint, okay? This is not a private forum. If you're telling everybody you commit mortgage fraud, please don't do it on our forum because we're not good with it. We don't recommend it. There's no way we get people asking us, hey, can you just say they give you a gift? No! Has to be a gift. Has to be a gift. Whatever you guys do on your own time, I don't care. But what you talk to me, it has to be a gift. I'm going to tell you it has to be a gift. Brian, I think what Brian is saying is he and his daughter bought a house. His daughter was the primary residence, and he was a non-occupant co-borrower, and he never spent a day in the house.
Okay.
So if she was the primary borrower, then that's perfectly fine by the rules. Moms and dads sign for co-kids all the time. All the time. Do you read it that way now?
Sure.
A little bit.
But
sure.
I'm still going to keep going.
Okay, cool.
And
go.
I'm going to say, if you do try to cheat the system, you'll get it found. You're going to get found. So don't do that, guys. Do everything the right way. Do what your loan officer recommends, and you should be fine.
Make sure you got a good loan officer. Make sure you got a good loan officer.
Ryan, I love that. I love that too, Ryan.
Cool. Appreciate you guys.
You guys are knowledgeable. Thank you,
I
Autumn
appreciate you, Autumn Love. We thank you.
Ryan, is 12K take home, 1K debt enough for 1 million? 740 credit, 14. Man, every time I do that, 14 debt to be exact. What?
Dude, you didn't go D&D on this?
Son of
I'm just gonna push it away.
Okay, so 12K take home, 1K debt enough for no, not gonna be enough. Your mortgage is probably gonna be closer to about 6 to 8 grand, depending on your taxes. So, I mean, yeah. So no, not enough.
Well, 12K is $144,000 a year, which for most parts of the country is really good. That's amazing for most parts of the country. If you're in LA, you're like poor. I hate to say it that way, but in LA, you don't even break the threshold till you hit 188. At 188, they're going, yeah, you make a little bit too much money for us to help you. But below 188, we can give you down payment assistance programs. We can give you zero down programs. I don't recommend them at that level, but you can get them because they know. You know how hard it is to get a house in LA? The prices, oh my God, they're insane.
Yeah.
Cool.
Brian Wynn, the taxes on 100K, the taxes on 120,800 a year in my area for those $40,000 house taxes, $400 a year. I changed my address to there. You got it.
All right. Okay. All right. I don't know what that means, but good job, Brian Wynn. We're here for you, man.
Well,
They knock on the door. What if I don't answer?
I
Yeah,
guess
don't answer.
They don't know.
Don't answer. But
they don't
we
know.
got a better scenario. Learn the rules so you can bend them like an artist. But don't commit mortgage fraud. And if you do commit mortgage fraud, don't do it around us because we're not good with it. And don't do it on anybody's life, on anybody's.
Who
Please,
answers
please
the door
don't.
anymore? Does anybody answer the door
I
when
don't.
someone knocks on it?
I got cameras, man. I pull up the camera. I'm like, who's there?
Yeah, everybody has cameras.
Yeah,
I mean,
I
does
got-
anybody answer the door
Sometimes I'm
anymore?
a jerk. My neighbor came over and I didn't recognize him. I'm like, what do you want? He's like, hey, I'm your neighbor. I came by to bring you something. Oh, thank you. Come on in. I was a jerk, though.
What were you selling?
Don't relax.
Girl Scout cookies?
Yeah.
Why are you selling Girl Scout cookies? Ryan, they're going to think I don't live there. They're going in my mailbox to make sure my mail is mine. They do that. They actually check the postal.
Well, they ask you, well, here's something that they'll say, hey, listen, can you prove you made this payment? And you're like, okay, cool. And then you send them a check. And the check has a different address at the top. And they're like, oh, shit, let's check the 4506T. 4506T says, hey, this is a different address. All of a sudden, the underwriter's going, okay, I'm not sure this is legit. And they catch you. They're sneaky. Yeah. Ryan, I don't know if you're a loan officer, but it sounds like it. They're smart. And just a simple rule, don't break the rules. Just understand them. Understand them. And I'll teach you how to push the guy. I'll give you an example. So we had somebody who was giving a gift. And the gift says, the guidelines say it has to be from a relative. That's what they say. They doesn't say you have to be from a mom or dad. It has to be from a relative. So the underwriter came back and said, hey guys, this is an uncle twice removed. And we're like, yeah, so? And they're like, yeah, that's not really a family member. I'm like, wrong. That is a family member. That's an uncle. And you say twice removed, but I don't buy that definition. And the other writer says, well, we're not going to sign off on this. I say, cool. Let me talk to your boss. I talk to the boss, and the boss says, yeah, you know what? That's a family member. And we got the loan funded. We fight with underwriters all the time because we understand the rules. And we make sure that they work in your favor. What else you got?
Well, I want to know what's going on with the Fed again, man. Tell me.
Dude, the Fed.
So what are they predicting here?
Well, what they said is we don't know if we don't anticipate an interest rate reduction in March. And the stock market just went boom into the toilet. Like boom into the toilet. Because everybody's counting on that interest rate reduction in March. But it didn't. It didn't happen. And then a strange thing happened right after that. The 10-year yield dropped. And when the 10-year yield dropped,
So they went like this?
Well, market went down. Remember, the market goes, yeah.
So both of them went down. Does that mean that investors took their money out of the market entirely?
Correct. Part of it is they
Put
took
it in
their money.
cash?
Yes, they took it. Well, they don't necessarily put it in cash.
Well,
They put it somewhere else.
cash?
Yeah. They put it in Chinese funds or Russian funds or wherever. There's a giant complicated system. But when things are not looking good, people pull back the cash. Now, the Fed controls the economy through M1, which is going to be your prime interest rate. And prime interest rate isn't what mortgages are based off of, but it is what banks borrow at, and that roughly filters through to the yield. And then the M2s, and the M2 is quantitative easing, quantitative tightening. That's how much does the Fed buy in bonds or not buy in bonds or push back into the market. So right now they're on quantitative tightening, and they've been on quantitative tightening for a while, trying to right the ship still from COVID. Oh shit, I can't say that. Still from that thing that happened. So it's just balancing the economy, man. And it's not really brain surgery. It's a lot of understanding of economic data and not freaking out over one vertical, because people are like, oh my God, unemployment skyrocketed or tanked. Oh my God, CPI's through the roof. Oh my God, jobs rates came in. It's not one. It's understanding all of them. And if you understand all of them and you factor them all in, you go, okay, and let me guide this. And that's Jay Powell's job and the whole board. And you'll see the board, they don't agree with Jay Powell all the time. There's some of the members of the board are going, I know what they say, but here's what I see. Now, he still has a voice. The guys on the FOMC board, they all have a voice. Jerome Powell's the speaker and the chairman, but it's not a dictatorship. He doesn't just get to say, hey, I'm holding rates back. It's a whole bunch of people that are elected to those positions that really understand the economy, and they say their piece. And one guy said, I think there's going to be 6 interest rate reductions. And the market went crazy. 6. I'm like, whoa, back off, guys. Back off. That's not the official statement. That's the statement of one of the board members on the FOMC. Because the FOMC actually is a giant committee of very smart economists who understand this stuff. And it's not just one thing. It's not a spike in unemployment or a drop in unemployment. It's not a drop in CPI or a spike. It's not any of that. It's a whole big factor governing the economy and understanding that it's cyclical.
Sounds like that guy knows something that they didn't want to leak yet.
Yeah, maybe.
That's
maybe.
Sounds like.
Mortgage
You're
rates.
right, Team Sanchez.
Yeah. Mortgage rates went down because of what happened yesterday. So how's that work? We're like, wait a minute. I thought there's a inverse relationship between stocks and bonds, because when stocks go up, bonds go down. When stocks go down, bonds go up. And that's loosely true. But I want you to think, a rising tide brings up all ships. A lowering tide brings down all ships. So there is an inverse relationship, but it's not static. It does move with the market. So as the stocks went down, in this case, the bonds went down too. The 10-year yield dropped dramatically. And because it dropped dramatically, New American Funding is putting out a 5.375 30-year fixed right now. 5.375 30-year fixed. Now, if you don't believe me, go to the link at the top. You'll see all our links. Go to Cool Stuff, and you'll see New American Funding today's rates. I'm quoting you the rates live off the site, and we haven't seen 5.375 since 2021-ish, right?
Yeah.
Ish. What do we got?
Ryan, you're right. Yes, 3%. You just got to add 3 more on top of that. Boom, we'll get it for you. No worries.
Yeah.
No worries. Ryan, good time for a 5-1 arm right now.
So here's the thing, Ryan, and you, if you're asking that question, you know a lot about finance, because 5-1 arm means this. Hey, listen, I'm going to get a mortgage, and for 5 years it's going to be at this rate, and then every year thereafter it's going to adjust up or down depending on the referencing index. And they used to use what? The LIBOR. Most of them were using the LIBOR. It's changed. It's not necessarily LIBOR. Some have morphed to the Russell 2000. But what you said is, I want to lock in an interest rate for 5 years, and then as it adjusts, I will go up or down with it. So that's a 5-1 arm. But here's the catch. Every bank in the system knows if you're in at 5.25, if you're in at 5.2, great rate today. But 1 year from now, it's 4.25. You're not keeping that loan. Every bank in the system knows that. Every bank. And because of that, they price in their profit in the front instead of the traditional way of going, hey, listen, this person is going to refinance or move out in 5 to 7 years. So we price out the profit in 5 to 7 years. But because we're at a high interest rate environment and the Fed has come out and said we are going to be reducing interest rates by 3 to 6 times. That's all the FOMC members. 3 to 6 times in the year 2024. We know rates are going down. We know they are. We know they are. We just don't know when. So if you were a bank and you know, hey, rates could go down in 6 months. So it's 5.25. This guy's going to refinance in 6 months. I need to make my money right now. And it used to be you could get an ARM with a really good rate because they wanted to keep you. Because they're like, hey, 3%, well, it's going to be going up. But this guy's not going to sell. So I can factor in that this guy's not going to sell because they use big data. They use economic data to find out when people are going to sell. And there's not a bank in the world that's going to catch them by surprise that you refinance out of that 5-1 ARM. So what that means, if I price you a 5-1 ARM and a 30-year fix, they're going to be about the same right now because all the banks are trying to make the money up front because they know they're not going to keep the loan. Holy smokes.
You're correct, Ryan. They outthink you.
What?
They outthink everyone.
Yeah.
Here's what you guys are going against. You're going against the most money in the world. You're going against people who have put these systems together years before we were even born. So they have all the angles. So yeah, you're correct. It's unfortunate.
Yeah, and most people step in going, I'm going to get over on the bank. You're not really getting over them. You do have to understand the system. And it's kind of like working out. You can go, hey, listen, I bought myself the Thigh Master, so I'm going to be in shape. No, you can't shortcut it. You still got to work out. Can you do it with a Thigh Master? Sure you can. As long as you do enough time to burn the calories and build the muscle, you can do it. Same thing in finance. Can you use the system to make it work?
Social media. You said Thigh Master. No one here knows what a Thigh Master is.
You're right. Oh
Come
my God.
on.
What's the
Actually, on that note,
What's the new version?
new version of workout equipment? I don't know. I'll think about it. But did anyone catch the social media CEOs being grilled yesterday by a special committee?
Yeah, what do you think about
Anybody
that?
see that?
Bring it out. Bring it out.
Anybody
Thank you.
see that?
We see you guys on Instagram. Thank you very much. We see you on Facebook. Thank you very much. TikTok. We appreciate you very much. And YouTube. Only a couple on YouTube, man. We don't get an audience on YouTube. I don't know why. So anyway. Tell me about what you think about the social media guys.
So I didn't catch everything. The only section I caught was TikToks. And they all have their scripted, written out answer of what's going on and how they're preventing this and not sharing that and privacy. But the truth is, these are the most invasive. I don't know if I say it, what's going to happen, to be honest with you, but I'm not very happy with what's happening. I'll give you an example, okay? So me and my kid were driving yesterday, and there's this very cool show on Netflix right now. It has to do with USA for Africa. It was a song they did years ago called We Are the World with Michael Jackson, and some of the greatest artists of the 80s, literally the greatest artists of the 80s got together and did this song.
We are the children.
So in this conversation, we spoke about Stevie Wonder, and we spoke about the song itself. Within minutes, my kid hopped on her social media
to find out who Stevie Wonder was?
No. They both popped up in her feeds.
Oh, really?
We Are the World popped
dude,
up,
that's crazy.
and Stevie Wonder popped up.
Oh, that's crazy, man.
So this is what I mean. They're collecting everything on us. And this is just a conversation we had in the car.
Ryan, I'll give you a little bit of advice. You're saying back to the drawing board. Now, thank me. Well, here's another little piece. When you get down and you sit down and you're actually looking at the loan, you're going to get the conversation of, should I buy down the rates? That's going to be a conversation. And is it a good strategy? Okay, should I buy down the rate? So let's just say I priced you out today. You're a perfect loan, 5.25%, 5.375. I priced you out 5.375. Well, with that, you're also going to have the ability to buy down, maybe even into the high fours, maybe into the high fours. But it's going to cost you $22,000. Is that a good idea? Okay, so here, let's say that we did that, and you spent $22,000, and then 6 months later, the rates are at 4.5. That's even better than what you paid for. Now, 6 months, does that give you enough time to make up the $22,000 in savings? Probably not. Probably not. So, inside of the big picture thinking, you have to think about strategic refinance. Because if you don't think about it, you're just going to spend money to buy the rate down and then refinance a little bit later, and whoever was advising you is stupid. Sorry, did I say that? Yeah, I did. Whatever. So, because you do have to factor all of it in. Now, there are cases when this makes sense. Like, hey, I'm at 57, but I have to buy down the rate in order to get into the house. That's a different scenario. You paid in order to get something that was just out of reach. You drop some money to go, I'm in reach now. We do that sometimes because you're outside of ratios. But if you're planning this, you have to plan not just short term, long term. And long term, you have to look into 2025. Because if you follow the economic data says 2024 is going to be good, starting about third quarter. It's going to be really good. We're actually planning on it being really good. Do you think it's a shock to us that they didn't drop interest rates? No. Is it even a shock to us that they may not drop interest rates in March? No. We've been saying we believe the first rates will come in about June. And I hate to say that because I make more money when the rates drop. But it is the truth. And because of that, we plan that way. So as you're thinking forward, you're going, hey, listen, I'm buying my house. Maybe I should refinance it. The loan officers that only are looking for the commission, they're going to say, every 6 months, you need to refinance. That refinance costs you money. Let's do a strategic refinance. We know we've hit the top of the cycle, or we believe we have. We believe we hit the top of the cycle. Let's try and plan the bottom of the cycle. And then do your forever loan. And then pay it off fast so you don't have to pay the bank. Because here's the catch. If you borrowed $500,000 at 8%, do you know how much money you will have paid the bank at 30 years? Anybody? All of our audience viewers out there, if you borrowed $500,000 at 8%, do you know how much you will have paid the bank after 30 years? It's mind-blowing. Ryan, 1.7 million. That's about right. Yeah, it's about right. 1.7. That's about right. I would say 1.9, but 1.7 because of compound interest. Now, think about this. You borrow $500,000 and you paid the bank, let's use round numbers, 1.7 million. I think it's a little low, but 1.7 million. Who makes the other 1.2 million? The bank does. And you can get mad at the loan officer because he made 2% or 1% or whatever he made. You can get mad at the realtor because they made 3% on each side. What does the bank make? The bank makes, oh my God, $1.2 million if you pay it off correctly. Now, once you know that, we make sure that you strategize how you pay it off, because paying it off can be advantageous if you're in your high earning years. If you make $500,000 a year, you need write-offs. You need them. Because if you haven't paid taxes on that, it sucks. Sucks. So,
are refinancing rates higher for rental properties than primary homes? If so, what's the average?
You talk.
So yes. So when you're refinancing rental properties, that's a higher risk for the bank. Okay, you're not living in the house. You're an investor. You bought the house. You put the down payment. You did everything. But the risk is someone else is living in the house, and how are they going to treat that home? Most people do not treat their other people's stuff better than they treat their own.
Ryan, I'm going to give you a hack in a second.
So that's the answer. So yeah, it's going to be higher. That being said, it depends on your credit score. It could be higher by a quarter of a point. It could be higher by half a point. It depends on what your file looks like. It depends on how it's built. Your DTI, your loan to value, your reserves. So everything is a factor. The higher the risk, the higher the rate, the higher the spread.
So, Ryan, I'm going to give you a little hack, and I want you to, because it sounds like you're a loan officer. Good for you. I hope you are. So, if you are, here's something to consider, because I've had this conversation thousands of times. Somebody says, hey, listen, I hear if I get a 15-year fixed, I'm going to pay the bank less interest. I say, yes, that's true. It's 100% true. You're going to pay the bank less interest. Okay, cool. Well, I qualify. Yes, 15-year. Perfect. Now, I want you to entertain something. I want you to entertain a 30-year. Well, why, Lee, if I'm going to pay it off in 15 years? Yeah, but we did the 15-year. We know you can do it. Here's your payment. Let's just say it's $3,000. So here's your payment, $3,000. Now I'm going to rerun this file, 30-year fixed. Here's your payment, $2,000. Okay, so yeah, but it's going to take me 15 more years to pay it off. You're correct, 100% correct. Unless you have self-discipline. If you have self-discipline, I want you to take that extra $1,000 that you were willing to pay, and I want you to apply it exclusively to principal. Exclusively to principal. If you do that, one, you're going to get a lower payoff time than 15 years. Lower payoff time than 15 years. Why? Because the bank amortized the profit into the 15-year, and they amortize the profit in the 30-year. They make most of their money at the front of the loan. At the front of the loan, you're paying down the least amount of principal. And if you actually look at your mortgage statement, you'll be like, Hey, wait a minute, I paid $3,000. How come only $300 went to principal? Because the bank gets to choose the amortization schedule. But if you say, hey, listen, instead of $300, I paid $1,300, you will change that game and you will do so much better. But it takes the discipline to be able to pay off more towards principal. And a lot of people aren't ready for that. They're like, no, I'd rather have my mortgage payment that the bank mandates. Well, if you're trying to get over on the bank, the right way to do it is to do a 30-year fixed and increase the principal only payment. And make sure it says principal only, because the banks play this tricky game. They play a tricky game. They're like, oh, cool, you sent us an extra $1,000. We're going to call that an advanced mortgage payment on next month. Oh, we just advanced your mortgage payment. You don't have to make a payment for about 9 months. Because you've been advancing the... No, I haven't been advancing it. I'm paying down the principal. But they play that game. I've caught it a few times. And it's downright scary. You know why? Because the banks, they make their money. They make the majority of their money in the first half of the loan. Because most of it goes to interest. It's downright scary how much goes to interest. Remember this thing that Ryan brought up. If you finance a $500,000 house... $1.7 million is what you pay by the end of 30 years. What? That means the bank made $1.2 million off of you. What? That's crazy. But there are ways to hack the system, and that is one of the ways. Cool.
All right, dude, you ready?
Okay, what do we got? Are we done?
Yeah.
You know what? We appreciate you guys. You've been great. We're here to help you get a house in 2024. We've been Chris and Lee. We'll be back.
Cheers.